What's up, everybody? Welcome back to the Crypto Talk, bringing you tools, opinions, and knowledge in the crypto space. If you like that information, go ahead and hit like and subscribe so you don't miss out on any videos in the future. I've been gone for a little bit, and I do apologize. Just been trying to get back on my game. Been doing a little bit more technical analysis to bring you guys onto the YouTube videos as well. But yeah, there's been some major FUDs, some major crashes in the past markets here, and I wanted to kind of go over TA and fundamental wise what's been happening in the market. So found this awesome article that says 5 reasons for the crypto market's 500 billion bloodbath. So Wednesday's market meltdown, it wasn't just driven by a single factor. Crypto markets took a brutal pounding. Wednesday, they fell over 30%. Bitcoin fell to about $30,000, just over 55% from an all-time high, at least at, 64,000 just a month ago or two. And the other cryptocurrencies like Ethereum and Dogecoin, they fell even further, like 70, 80%, some of them. Investors were looking for answers, not surprising, right? The crypto holders lost more than a third of their wealth overnight. Some people lost half. The reality is the crashes of the magnitude are rarely triggered by one event, but instead multiple overlapping factors. So that's what I like to talk about today. Is people think that it's just one thing, that Elon Musk caused the crash or China banning Bitcoin caused the crash, but it was multiple factors on top of that, micro factors in the crypto space. So let's break down each one here. We have China banning Bitcoin. So on Tuesday, global news agency Reuters published a dramatic headline suggested that China had banned cryptocurrency. A handful of payment firms has simply restated these rules, limiting crypto transactions that have been in place since 2017. All right, guys, so here's one of the biggest issues is if you're just watching the news and you see stuff like this, especially for the new people in the crypto space, China's been banning Bitcoin since 2013, right? Even further, I think. So look at this timeline, right? We have 2009, China bans the use of digital currencies. 2014, a false report circulates an outright ban on all Bitcoin transactions. September 2017, China bans ICOs and domestic Bitcoin exchange activity. So this news isn't anything new, guys. This is kind of what the news does, is they spread FUD, right? Especially at times of uncertainty in the markets, because it's only going to make you sell. You have to have a strong gut and strong hands in the crypto market, and that's why you have memes called diamond hams for a reason, right? Hold, hodl. Make sure you just take in the Bitcoin. You don't sell it off, right? That's what these big investors want. They want your Bitcoin. It's digital gold, right? You don't want to ever sell your gold because it's so valuable and you can't really use it as a means of exchange. It's meant to act as a store of value. All right, so China's been doing that since 2009 apparently. So it's been banned, nothing new there. Second thing we had was Elon Musk. Tesla CEO had single-handedly wreaked havoc with the crypto markets last week, using tweets and media appearances to send the price of Dogecoin and Bitcoin up, down, and sideways. Musk's antics, the latest of which his bullish diamond hands tweet. Let's check that out here. All right, Tesla has diamond hands, May 19th. And then shortly after, he commented, "Credit to our master of coin," on that same tweet there. So his tweet in support of Bitcoin. Crypto bears who say one man's ability to swing the markets underscores how the crypto industry is just immature and lacks sound fundamentals to inform its value. And I kind of agree with that one there, right? So if a market's being swung one-handedly by one person in the world, one of the top billionaires in the world, 20 to 30% just off a tweet alone, it shows you how immature a market is, because in traditional markets, it doesn't just take one person to swing the whole market left or right. So crypto does have a long way to go as far as adoption. Only 1 to 3% of people are actually, 1% of people actually study and understand cryptocurrency. 2 to 3% at this point have probably introduced to cryptocurrency in some way out of 8 billion people. So it's only a couple million out of those 8 billion people. We still have a long way to go in cryptocurrency. On top of that, we had leverage positions that got liquidated, and liquidations across the market didn't cause the initial sell-off, but it did help to exacerbate it. In plain English, what happened is many firms had bet on Bitcoin using borrowed money leverage, the same way retail investors can get their brokerages to front them collateral based on the shares they already own. That's all fine and good when prices hold strong and go up. But when prices drop significantly, trading houses gets antsy and asking firms to post extra collateral. In the firms that can't do it, the trading houses will liquidate their positions to cover their exposure. So clearly that just means that a lot of people were taking out loans and more loans as the price was going up. And that's kind of what happens at one point, right? And then the big institutions step in and they sell off, causing major liquidations. On top of news around in the media, they kind of FUD it all together at once. I don't know how it seems to always work out that way, but it does. And speaking of the liquidations here, let's go to the Bitcoin chart and kind of see this massive sell-off that's been happening, right? So we had May 19th. We came up, made a rebound, crashed down. This is the daily chart, guys. And if we turn on our moving averages, we can see Bitcoin is actually in a bearish trend here. The 20 and the 50 are definitely making a down cross, which is signaled as a death cross in any market there. We did bounce off major support level here around 30,000. We bounced back up into these 41s. This is where we're at right now. And if we go into the 4-hour, you can clearly see a little bit more that we're holding resistance and support around this $42,000 to $40,000 level, maybe 39. So we have to break above this in order to go down. But I could see Bitcoin possibly staying down in these levels for a little bit, right? So we're possibly chopping around in these levels, maybe trying to push higher, maybe come down, maybe go up before we break up and test this support, right? And keep going higher or lower, depending. So that's what I see in the Bitcoin charts here. And you can see we haven't really been at these levels since the beginning of this year. We've just had a massive run up of 500% since September alone last year, right, guys? So this is honestly healthy for the markets. It needed a cool off zone. And from the very top to this $30,000 level, we came down 53%, a 50% retracement, which honestly I think is healthy, right? Because you can't have something, if we go to the weekly chart, just continue to go up and up and up and up forever. It has to come down at one point. So we had a 50% retracement. If you go back to the previous bull market in 2017, you can see right around here is where we are, okay? April, May, June area. And what happened in June, right? It came to an all-time high of 2,900, came crashing down about 37%. Now, what I would say is from the previous bull market, which I wasn't in it, guys, but from the previous bull market to what I've been studying to now, it takes retracements for the market, right? It's going to take these big sell-offs, and this institutional pump is different this time. Apparently, the crypto market is different. There's bigger institutions. There's more celebrities. NFTs have coming out. The DeFi space has changed. The DeFi has come out, period. Smart contracts. Just so many amazing things in crypto that weren't there 2 or 3 years ago. So it's a different market now, and I think this is a healthy retracement for Bitcoin. We're going to be going on and upward from here. We possibly may test 30,000 again, but it's going to be some very hard support to break through. If we turn on this visible range, which is volume, you can see we have lots of volume being built up right there. And if we go into our 4-hour chart, you can see we have even more volume being built around this $39,000 level. So looks like this is going to hold strong before we just take off. Like I said, we may chop around in these levels. But another thing I wanted to show you is, look at the schematics here. This is called the wick off event. And if I turn these off here, now tell me this chart doesn't look like that, all right? And here's the thing. This is something institutions follow. Big institutions, Wells Fargo, banking corporations, just any kind of big institution you could think of who is being introduced to crypto as an asset, they are most likely following something of this pattern. And what I think about this pattern is, when I see it, is yes, it looks almost identical to Bitcoin here. We had this pump up, bam, pump up, we come down, pump up again, boom, make a higher high, come down, make a higher low, bam, higher low. Then we pump up one last time, making a higher high, one last time, higher high, and before we kind of just start marking it down and crash, and then bam, phasey major crash, which is what we just went through. And when I think about this chart here, which is pretty accurate, I think not just me, but other people are obviously looking at this chart. So us as humans are the one creating these patterns, right? If this chart never existed, we may have never followed this pattern in the first place. So it's kind of very interesting to see. And if you can see that we made that downtrend on this pattern, what's actually up next is this accumulation phase, right? So that's why I'm saying I think Bitcoin may just kind of bounce here, kind of try to bounce up, come crashing down, bounce up again based off this pattern, right? And just kind of accumulate here for a while, which would be healthy, very healthy for the market before we run up on the next leg of the bull run. All right, so on top of Elon Musk, the liquidations, and China banning Bitcoin, we also have Tether, that is a stable coin, which means that it's a cryptocurrency designed to hold a steady value. It's pegged to the US dollar, so every Tether token is backed by $1 US. Last week, Tether released a pie chart breakdown. What it revealed wasn't reassuring. The chart showed the bulk of its reserves were in commercial paper and various loans, not the sort of assets that would pass muster if Tether was a regular bank. The timing of this week's market crash coincides with the deadline for Tether to submit new financial records to New York's Attorney General, leading to chatter on Reddit and throughout social media that the two events could be connected. All right, so on top of that, guys, we have tax day. This is more banal but also plausible explanation. So May 17th was the final day to do final taxes for Americans, which was 3 days ago. Those who traded crypto last year probably finished with 2021 as a healthy profit, but also capital gains as they owed the IRS, right, for taxes. As much as many U.S. crypto holders may have sold off a chunk of their portfolio this week to pay Uncle Sam. So taxes could play a role there. It's possible that people were trying to sell their cryptocurrency in order to pay taxes back. And then, of course, the list above is not exhaustive. The broader markets have been on edge as a result of macroeconomic factors such as inflation warnings and the U.S. government and central banks' recent decision to stick with loose fiscal and monetary policy, which means stimulus payments, deficit spending, and low interest rates. All of that technically gives rise to broad fear and uncertainty. Combine that with the events of this week, and you had the perfect storm for economic upheaval and a massive crypto sell-off. All right, guys, and that's what I like to bring to the market today is it wasn't even just those 5 factors, right? It's all these other factors. It's this wick-off event factor, right? Just things that people are seeing in the markets. It was everything. But to wrap it up, basically, this is the extreme fear that grips Bitcoin market after pricing plunge. So Crypto Fear and Greed Index, it's a metric that measures the current sentiment in Bitcoin. The market has fallen to extreme fear, which are levels that have not been seen since April 2020. The Crypto Fear and Greed Index is now at 21, which was down from a greedy level of 73 just last week. And this is the index here, guys. So since the beginning of this year, it's kind of been splurging back and up, but it's been so high. We haven't been at these levels since last year, April 2020, right? Other market indicators are reflecting that fear according to Archine. So the grayscale discount has widened a record 25%. This is the difference between the price of Bitcoin, as implied by the trading level of grayscale Bitcoin trust shares, and the spot market price. Funding rates in the market for Bitcoin derivatives turned negative. The funding rates fell 0% on 2 separate occasions over the past week. And even more bullish is short-term price volatility has climbed to the highest level since February. The 30-day volatility is now at 4.5%, indicating that Bitcoin price has been moving 4.5% every single day over the past month on average. All right, so this is very bullish, guys. Once again, Bitcoin's holding very, very strong support levels right here. I think we're definitely going to make a bounce back. I would say daily and weekly on our EMA, our moving averages here, exponential moving averages. Daily, it's definitely bearish. Weekly, we're hitting bearish levels that actually haven't been seen in the previous bull market. So this is all new, and we're going to see how we go through this. But if you like this kind of information, once again, go ahead and hit the like and subscribe button. I bring you tools, some opinions, some knowledge in the crypto space. I'm not a financial advisor. I just like to give you guys the knowledge that's needed and what I learn every single day as I'm going to the markets myself. So I'll catch you on the next one. Leave any comments if needed.